There are like some really good examples of divergence between US 30, NAS, and SPX because they pretty much move the same way. But there's some things that you can point out um, outside of it that you can see that divergence. Let me just pull it up. So the better place to see it is on the daily. And since that's where we're gonna start, I'll just go over that real quick. I'm gonna get rid of these drawings because we need to do this with everything. Let's start from scratch. So I'm gonna just go over last week real quick. We had this push up to this particular area on each one of them on the daily, and we had our rejection, right? Um, US 30, SPX, and NAS. We came short of basically the monthly on SPX and US 30, just short of it, and we dropped. We had this order block on the daily, order block here, order block here. The biggest thing about it's not so much to consider is not so much the divergence, but just consider that each one of these has a point of interest to the downside that we couldn't trade above, right? And you can see on each one of these on the daily, we had a bearish order block right here on SPX. We had bearish order block right here on NAS. We had bearish order block right here on US 30, right? And what's right above the monthly on SPX right here was right above the monthly on US 30. Same thing. We have an order block here and an order block here. Then if we look and dive a little bit more deeper, right? Here's a fair value gap right here on SPX. We got the same thing in the same area. So with the divergence comes similar orders that are entered, right? So the divergence comes into place when you have there on the pairs, like right now, we have equal divergence, right? Each one of these made a low here and a low here, the same low here and low here, and the same low here and low here. Sometimes you'll notice that when that divergence comes into place, going back to this area, we made lower highs here. I don't know where we were. Let's find where we were right here. So in this same area on the daily, we made lower highs over here as well. So it's lining up. That's the kind of things you want to look for. Are we making lower highs on NAS and US 30 and SVX and NAS 100? In this case, here's that lower high. The initial high was here. The lower high was here. And it gave you also a fair value gap as well. So when you're considering your divergence, consider what's being made at the same time as the pair is making it. So if we're over here on NAS, on SPX over here at this high given right here, are we going to make a higher high and take this high out on SPX, or are we going to make a lower low or lower high or whatever the case is? We can see over here this high and this high on US 30 we had a high and the high was taken out. Over here, this same high on SPX and NAS, we didn't take this high out like we did over here on US 30. Here's that same candle. So while these candles were making lower low, lower highs over here and over here at the same point as this high was made right here, which was down here on NAS, US 30 was making a higher high right here. And it swept this high actually at the same point. So on NAS and SPX, at this same high, we have a divergence here with NAS 100 and SPX, but we have a convergence here on US 30. We still got a high that was made, but on these highs, there are lower highs over here. But the key thing is to focus on what type of thing is being made as this is done, right? Over here at this high came with an order block and a fair value gap right here. This high came with the order block and a fair value gap right here, right? Order block, fair value gap right here. And then we traded back up into it. We pierced it, but that was still where we sold off from, right? Just like over here, we created it here, traded down below it, traded back into it, and sold off. And then we had, from this point on SPX and on NAS, we had a shift in market structure from that point on to the downside. Once we traded below, give y'all a key signature, right? It's a good question. Here is your key signature, right? This combination. There's an order block right here. And then here is the fair value gap. This area right here. Make this a little bigger. Same thing over here. This is your order block. This is your fair value gap right here. Right here, right? And then over here, hold on, let me make sure I annotate it. That's the high. That's the low. That's the high. That's the low. Same thing over here. Bam. Order block. What's up, Jason? Over there grubbing, man. Let me get some.
Yeah, man, I'm over here at Hollywood Beach and just got off Christine's call and had to jump on yours. I'm trying to catch this bag like y'all.
Man, let me get some.
Come on down, man. I got you.
All right. So
Oh, and for Christine, right quick, that Porsche building that she was playing, I'm down the street from the Porsche building. I drive past there as my inspiration.
When I tell you, Jason, wasn't that lit? And then remember, I told you guys, they're building those Porsche towers and like for traders. So they have trading rooms in them and everything in the towers.
where
Like,
is it? In Atlanta?
That's
huh?
gonna be me right there in Sunny Isles.
What'd you say, Corey?
Where is it?
In Miami.
Oh, in Miami. Okay.
Yeah, the Porsche Design Tower. Yeah. They have like, they're building these big billion-dollar projects catered towards traders. So in the building, they have rooms where you can go with all these big screens for your trading, and they make sure that your Wi-Fi works on the beach so you can trade on the beach.
Shoot. That's dope. Okay, so just to go back, right? All right. So we already noticed we got these three similar situations, right? And the way you can handle that is you have three levels inside of a gap, a fair value gap that you can consider. These three levels right here are your high, middle, and low, right? And those three levels are your areas where you can take your trade from. But what you want to do is you get this from the higher time frames and you go to the lower time frames to get your entries, right? So in our case with SPX, we would have pierced the high. Our trade setup would have looked something like this. We would have been going short at the high, right? And you have two options, right? If we are in a crazy market, your stop loss has to be this high. If you're in a if you want to be tight with it, your stop loss would have been above the high that made this candle low or this candle high. Now mind you, we're looking at the daily chart. So right now, if you're saying 39 points is high, yes, but you know, you wouldn't actually use this particular stop loss unless you had like a, you know, unless you were planning like a low risk entry or something like that, you would go to the lower time frames to get the entry, right? But essentially, you're just saying that as long as we don't trade above the candle, that engulfing candle, we should be okay. Or at worst case, we don't trade above this swing high. Our targets at that point would be, I'm gonna have to expand this a little bit. Our targets at this point would be first this low. This is the low that made the first swing low. That would be your first target right here. Then that's your first area of liquidity, right? Your next area of liquidity is these lows right here. That would be your next target, right? Then notice on the opposite end, there is a bullish fair value gap right here. It's really small, which is from this low to this high to this low. You could target this area right here. And again, we would have tapped that pretty clean, right? Because now we're at a point where if the market wants to, it can react right there. You'll also notice here, we got this low on this candle. It held up pretty much inside of this order block, this fair value gap. And then on the next candle's opening, we actually pushed up. So essentially on the lower time frame, we did react to this level. It just did not hold, right? It just didn't hold. And then inside of this area right here, some other stuff happened too. There's an order block on the lower time frame that held us up right here. But as far as targets go, you would have gone from order block, fair value gap, to liquidity pool, to liquidity, bullish order block right here, held it slightly, pushed up, traded back down. Here's your shift in market structure again right here when we broke these lows. And what happened right here, we have an order block to the upside. We have a fair value gap, small fair value gap right here. And then we had a push down even lower. Those, once you see that kind of stuff, that's what you want to look for as your signature, right? Same thing over here on NAS. Same thing on NAS, right? Your engulfing candle, this is your order block. Your trade set up with, look, you now we had a little overage over here on this where it pushed through the gap on this trade, but it still held the order block. So that means that we likely got another imbalance that it reacted from on the lower time frames, right? So here is our 4 hour, and you can see this was the daily imbalance right here. But on the 4 hour, we got a larger range from here to here, right? And in this case, we could have took this setup on a lower time frame where we could have probably came all the way down to the 5 minute probably. And we even had gaps over here and a rejection over here. But I'll go down to the lower time frame and show you that. Essentially, though, we would have been looking at the same kind of setup, right? We would have had our low, trade up, shift in market structure right here. Once we see this shift, when we take this low out right here, and we have this engulfing candle, we even made another lower low. Once we return back to this area, we already can say, if we don't trade above this candle, we can assume that this is going to go lower. And we can start looking for our entries around the order block, or we can come back inside of this area. This little small gap right here, we could have used that, but that wouldn't have been as clean as what we saw on the SPX setup, but you still had this. You still had this, right? Then on US 30, same thing. It just would have looked a little different. You initially would have got the setup over here. Gap, here's the gap right here. Your levels that you want to consider, you would have had 35,060 as an entry. Over here, you could have put your stop loss right here, here, or here. And then your targets in this case would have been, your first thing is taking this low out and then trade down to this low right here. And you would have hit all of those targets if you taken that initially. Now, when it came back around, we did pierce it this time. So depending on how you set the trade up, once we came back in this area, you would have got stopped out. But even though you got stopped out, you had this level, this order block, or you could have considered this entire area as an order block, right? Because this is just the last move up. Because if we went on the weekly at that same area, what we got right here is another imbalance. And we would have been reacting right off the middle around this area too. So you could have had those as points of reference to know that, all right, cool. I still believe that we should drop from here because we are at the fair value gap on a weekly perspective. We pushed up above it somewhat, and we already see that, yeah, we kind of pierced it on the daily, but if we get to this area and we still hold it on the weekly, I'm still okay with taking this trade. I might just need to come back and refine my entry, be a little more patient with it so I can see that this falls down, right? Another way you can see divergence, and to me, that's the easiest way, because you know that if I'm seeing it on SPX, if I see a order block on XPX, I should expect the same thing. If I see an imbalance on US 30, I should see the same thing, you know, regardless of how high or how low it is. When I start seeing the same type of order flow on SPX as I do on NAS, as I do on US 30, and they start matching the order flow, that's where you really, really can see the divergence, right? Because we look at these charts, right? We can go through these charts right now and see the order flow for each of the charts are similar. It may not be exactly the same, right? But you can see that the same type of order flow is being presented, right? Going into next week, right? The order flow we have right now, the divergence that we have right now is we have an order block, and we have, with this order block, we have a gap, an imbalance on each one of them. The candle that created the imbalance was the order block. So we have to trade back through this area if we're going to go up, right? Same thing over here. Order block. Imbalance. Same thing over here. Order block. The low of our imbalance right here. Before we can make a decision point as to where this goes and does this go any higher, we have to make sure that this area is balanced out in price. So each one of these, this is our combination, right? This is our imbalance, this is our order block and fair value gap high. And that's going to be for each one. Then this is our gap low right here. Okay, so going into next week, our first area that we need to consider is we need to push through this gap low for each one. Notice too that we already kind of pierced it. We actually already pierced it right here on each one of them. 1, 2, 3. Each one of them has already pierced it. So technically, we can actually go lower from here. Technically, hold on. Hold on. Technically, all right, so technically we can go lower. We already are permitted to go lower at this point and at least come back to this low, because we have traded back to this already. And if we want to go lower, and I'll show you some examples too as to why this is the case, but technically we can already go lower. Should we need to push higher though, right? Should we need to push higher? These are the areas up into this high that we have to consider between this low up to this last high. So, but highest probability is we stop short of the high and just trade to this imbalance, right? To the imbalance high. Highest probability. Not saying that it won't do anything different, but the probability is higher that we don't make it past this high. And we stop somewhere around this order block or this imbalance right here. This is probably early to midweek, right? Going into, and it just kind of depends on how the market opened, right? This last week's opening price, monthly. So we got a lot of things that would hold this down as it stands right now, right? So just going into early week next week, these are some potential areas I could see us trading back to. However, like I said, we can still, when we've had our reaction off of this imbalance already, and we can go lower from that. But this would be highest probability range right here, where we push at least back up to this area, because we want to, if we're going to go up, we got to fill this back up, this imbalance on each one of these, right? Just like last week, right? This little gap right here, this little gap right here, I thought you can see it on here, but I don't think you can. Let's see, maybe it's on the weekly. No, it's not here. So you only seeing this on SPX. Okay. Yeah. So if we do push up above this last order block, then the monthly would be the area along with this order block that would challenge us from going higher, right? So the main things we need to look out going into next week is our first area that we mentioned already, which is this order block, this imbalance, and we got last week's opening price right here. So these are the things that could take us down, right? And that's kind of how you want to map it out. Like you're not predicting or projecting or considering a bias or nothing like that. You're just going through to say, all right, if we go back up, here are our roadblocks, right? And if we go back, if we want to go down, here are the things that we could be trading to, right? So if we go down, the first area we got to consider is this low on each one of these. We already know the low, the low, the low. If it breaks through that low, we need to go to a higher time frame and see what's going on. So let's go to the weekly. We already traded to right here. This is the order block on the weekly. Order block on the weekly is right here. We go any lower on SPX, the low of this order block is what we'll be looking at. Low of that order block is 36.91. We already almost traded to the middle, which is 37.84, which is crazy to say that. We traded at 38.10, right? We traded to the high, that's 38.77. Yeah, we traded to the high already. And if it doesn't hold this low that we just made last week, then we have to look at these other areas of the order block. to see if we want to trade down to that, right? If we do go up, which is heavy to say that, right? Because we've been down all these weeks, right? But like, if we want to go up, now we know, okay, here are potential targets from here. We can say if we do go up at any point, we can be trading back to these levels of price. 39.45, 39.74, and 40, basically 4,000, right? Honestly, on Friday, I'll be honest, I was looking for price to push up to 39.74 before we drop, but we only went to this low at 40.47, which was my entry for this sale. And we basically left this gap, came down, left equal lows right here, pushed back up to the low of this imbalance, and then we dropped. We set a new low. So just looking at this last candle on the 4 hour, this is implying to me that we might have set the low for now, and we need to come up into this area. That's what's giving me the bias that this is going to go up into this imbalance a little further, right? So this is what I'm looking at going into next week. This is why I'm looking at that going into next week, because we already had this push down, set a low, and now we coming up higher into it. So, and that's pretty much for all 3 of the indices. You can see it better on the 4 hour. If we go to NAS on the weekly, look at where we are. And here's that divergence again. On SPX, we're at an order block on the weekly. On NAS, we had an order block on the weekly. We on NAS and SPX, we missed the middle of the order block, but we traded through the high, which is here at 11,716. We haven't touched the low on SPX. We haven't touched the middle on SPX, just like we haven't on NAS. Let's go to US 30. So that means that US 30 should be at some type of point of interest on the higher time frame, right? So if we go to the weekly, look at where we are. I look at divergence a little different, because for me, you know, there you can take RSI and look at divergence, or you can use order flow to see divergence. That's how I look at it, right? I want to see, you know, if I'm at something bullish on US 30, I should be at something bullish on NAS 100 and SPX. If I'm at something bearish on NAS, I should be at something bearish on SPX and US 30. That's as far as I go when I'm looking at divergence, right? I don't go in and say, oh, RSI is making equal lows or equal highs, and then NAS is making lower highs and lower lows. I don't go that deep into it. For me, I just want to see if I'm at a point of interest on the bearish side on US 30, I should be at that same type of point of interest, whether they're the same or whether they're different, right? Because sometimes you might be at a fair value gap on SPX, but you might be at an order block or equal lows at NAS and US 30. But I just want to say, like, when I'll write it down on here. So looking for divergence. divergence between the indices. Consider your points of interest. Each pair, right? That's the first thing, right? And also, well, the first thing is consider your direction, right? Then the second thing is what points of interest are you at each pair? Examples of that is if I'm bullish, right? If I'm bullish, where is my bearish point of interest, POI? Where is the most recent? Where is my most recent? Because if you're bearish, if you're bullish, you're likely going to be trading to that on the pairs that you're looking at on SPX, NAS, and NAS and US 30. So in most cases, you're going to go from one bullish point of interest to a bearish point of interest. So that way you can have continuous order flow, right? And then if you're bearish, on the other hand, you're bearish, where's your most recent bullish point of interest, right? And then the third thing is you find this on the higher time frame. And look for your entries on the lower time frame, right? So for us, right? For us, we left, if we looking at the weekly, right? This high left this fair value gap and it traded to first this order block. We stopped off, we tried to push up right here, we failed. Then it traded down to this low, tried to stop, tried to push up, it failed, and it went lower. Then what did it finally do? It came down to this bullish order block, right? So if we look at order flow, we went from high to low, order block, back up to high, imbalance, that's your bearish point of interest. From there, we went from this high that we created down to this low. Here's a bullish point of interest. We failed it, traded back through it a little bit, held it for the most part, traded back up to bearish point of interest, failed it, traded back down. We had a bullish imbalance right here on the lower time frames. We tried to hold it around these areas, but we traded through it. We had a bullish order block right here. We tried to hold it. We pierced it and traded up and failed it again. We got near these lows. We tried to hold it right here and right here on these two candles. We failed it until we eventually saw that, all right, we wanted to come all the way back to here, right? Let me see somebody. Okay. Then same thing over here on SPX. we had the same situation. And on we looking at the 4 hour now, right? Order block right here, imbalance right here. We take out these lows. We got the huge imbalance right here to take these lows out right here. We didn't never came back into this. So that's one good sign that we know if price comes back up into this area, this may be an area to consider because we never had price come back into this range, right? Never had it come back into this. So we will likely get some kind of rejection right there. We already kind of know that, right? So we can take this area for the future as something to consider because we got an order block, we got a gap right here. So we know when we get to these prices that these prices are significant areas, right? Then we took this low out, these lows right here, these equal lows. And when we took them out, we left another imbalance that is here from this low all the way down to here, right? Equal lows, imbalance, another low, we came back up to it. It lines up, this particular imbalance line up with the daily pretty much, with the daily imbalance. And then once we came to 44 and 47 area right here, we dropped hard to, right? And then we shift the market again and we hold it down here. Pretty much hold it, right? So going, like I said, going into next week, we already had our reaction to push up slightly, right? Push up pretty hard. And whether or not this is going to hold is going to be a question. Now, on the lower time frames, here's another thing we can consider. On the 1 hour, you can already see, right? Imbalance left on the 1 hour here. It's our gap. Hold on. This is our bullish area right here. We got competing priorities, right? So if we do continue up, we have this bullish imbalance right here, where you will look at 39, 38.93, 38.73, 38.52. Your trade setup will look like this, where you see price, if it comes back down in any of these areas, worst case here, you use the lows that made this here or here or here as stop losses. And then you look to trade up above this high, and then into the middle of the order block on the daily, which is 39.73. And in this case, if we were to buy from here, we know, all right, if it comes back down into this area and it holds at one of these areas, we could have this on the lower time frame where we have situation where we come back into this, hold at the middle, maybe push back up to the high, hold down here at the low or at the middle, push back down this, and then we trade back up to these areas, right? Hold at worst case at the middle and push up above this to get to here. Also, you can see that that kind of give us like a head and shoulder pattern too, if we do something like that, right? The thing we got to consider on the downside though is this gap right here. Because we traded up so sharply, we could just be coming up to this imbalance, which gave us a shift in market structure right here when we traded below this low. Right? We left an order block right here. We left an imbalance right here. And we are at the middle at 39.03. The biggest ways you can tell which imbalances are likely to be used is when you have a shift in market structure, along with an order block, along with the imbalance like this. This is one high probability right here. Shift in market structure, engulfing candle to take this out. And then you have the imbalance that's left from here to here. And then you look for price to return to that, which is done already. Those are your high probability trade setups right here. So either when we go into the market next week, this will be, because we're in the middle of this imbalance, we need to pay attention to where it is when it opens and how it responds to this high if it trades up to that. If it comes up to this high and pushes down back into this bullish and it holds at one of these areas, let's get rid of this. If it pushes up, holds these highs over here, and then push down at one of these levels, then we can likely look to trade an upside move, but only then, you know. If we have price immediately start to push down into back into this area, we can still look for the buy, but you want to consider it only if it gets to one of these levels over here. And this would be a trade setup. From a lower time frame, you can be looking at something like this, possibly, where you trade from the high over here. But like we're at a 50-50 area right now. It could go either way. It could go either way. It could go either way. Let's check the Forex Factory right quick. So going into next week, what are some high probability days? So Monday, nothing on the economic calendar too heavy on Monday. So we could just have a real technical day on Monday unless we get some breaking news. On Tuesday, Euro news, GBP, USD news, manufacturing. This could be important because this has got to do with supply and demand right now. It's also can show signs of inflation. Then we also got Powell speaking. So Tuesday, for sure, should give us something hard, some big move, because we got Feds and we got this manufacturing PMI. Wednesday, core durable goods. Again, this got to do with this will have to do with inflation information. This is another key factor in inflation and cost of goods and services. And we have a FOMC meeting. I don't know if he's he's the Washington dude. Is he? Where is Richie one? Is he? Nah, he's not. He might give something, but then we got the meeting notes. So Tuesday and Wednesday for sure should be big news. Pending home sales, that's another economic factor that's like something we'll need to consider. Then we got unemployment claims, GDP. All of these are going to be important. So Tuesday, Wednesday, and Thursday. And Friday, consumer sentiment. So next week should probably be, next week should be pretty big.
Hey, Corey, I got a question when you get a minute.
Go ahead.
How you doing, my brother?
What's up, bro?
Hey, going back to the charts for a second, that SPX. So that fair value gap, and just above that fair value gap, you have the order block. So what is the smart money concept in reference to, let's say market wants to move up, and why wouldn't it continue up? Like say it fills the gap, but why wouldn't it continue up to mitigate the order block, or even go a little higher and take out liquidity right above it, and then come back and do what you talked about in terms of maybe coming back down to those buy areas at the lower fair value gaps. That's my first question.
Okay.
And of course, it can do what it wants. But then my other question is, why? Let's say it continues to move up. What's your thoughts on smart money concept in terms of moving higher, taking out liquidity, which does two things. There's three things. It fills the fair value gap, it mitigates the order block, takes out liquidity, and then because of the move down, and it took out that low to the left, which is how you talk about, yes sir, that shift in market structure. Mm-hmm. Why wouldn't it? What's the concept or the thoughts on it? Filling the fair value gap, mitigating liquidity, mitigating the order block, taking out liquidity, and then dropping and possibly going lower. If not, maybe making maybe a double bottom and then going higher, or just maybe going lower because of the shift in structure.
Cool. Okay, so here's an example right here. And I'm gonna have to go to the lower time frame to show you. So the reason why you want to really focus on is price gaps and leaves imbalances all the time, right? Like it happens a lot, but you want to focus on the ones that come with the shift in market structure, because that's the kind that's giving you the signs of where we're trying to go. And a lot of times they come in conjunction with a response to a point of interest, right? So again, right, going back to the example of like, this is an order block right here on the 15-minute, right? And then right here, where we have these equal highs right here, we have a little small imbalance right here and a small imbalance right here. If we go even lower, like let's say 5-minute, right? Let's say 5-minute. And I'm just using this as an example. We got pretty much equal lows right here. And then at the same time, as we make these equal lows, we have an imbalance that's left right here and right here. So this is giving us a sign of the direction that we are looking to go, right? So these equal lows become a shift in market structure. So where we were pushing up, we have this all of a sudden, we stop right here at this order block. And we have a new shift in the direction of the market to go to the downside, right? Going back to this area from a higher time frame, where are we at? Is up here, right? So going back to this, Same little area on a higher time frame. We can go to the 1 hour. On the lower time frames, we had a shift in market structure, early signs, right? Then you can see on the 1 hour right here, we got a shift in market structure as well from this low right here when we had was made here to here, right? Now, this will be a good example to show you like, okay, once we came and we made this low, we went lower, we came back into it right here and we failed it, right? We sold off of this level and we tried to get back down to this low right here and we failed because over here, there's an imbalance that it traded to and it held it. Once we held this one, that was our shift in market structure over here on the lower time frame, right at this area right here. Our shift came right around here, but this is the upside. So we had our upside shift and we
Okay. I'm sorry, let me interrupt real quick. Okay, I got you. So when it broke to the left and created the lower lows, that was the shift in market structure there. But then when it went up and then created that fair value gap, you just talked right, down. Yes, sir. And then tried to come back and couldn't come back lower. So that's another, you consider that another shift okay.
And remember what I said earlier, it always goes from one point of interest that's bullish to one point of interest that's bearish to one point of interest that's bullish to one point of interest that's bearish. And it just keeps repeating that over and 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 over again. So once it decided that this low was what it was going to make to this point, we created a bullish shift in market structure right here, traded back up to bearish market structure, bearish point of interest right here, came back to bullish point of interest right here. And then this wick came up to fill this whole area right here. This one wick right here, it traded back down and it started to respond to this area as if it was going to continue down, right? So if you had been looking at taking a trade from here, you wouldn't have been wrong, right? Because your trade setup would have looked like this. I'm taking it from the high, right? Which is, I actually took this. You're taking it from the high, your stop loss would have been this high, or these highs, right? Let's say you use this high, right? That would have been your stop loss. When the initial price, when you initially got to this area, you would have got, what is this? All the way back down to the low. That's 200 pips of profit. And it traded all the way down to here. That's 300 pips in profit before it came back up to knock you out of this trade, right? When you see this happen, that means that it's balancing out this imbalance. When you see price hold up inside of here like this, and then eventually bullish engulfing candle right here fills it up completely, and we trade higher and we create a new shift in market structure around this area right here. And then finally, right, we take this high out, we trade into the daily area up here to the daily fair value gap right here and over here. And then finally we sell off again. So it's just like, it's always competing. It's always competing priorities, right? I'm going to go from bullish point of interest to bearish point of interest. I'm going to go from bearish point of interest to bullish point of interest. I'm going to go from bullish point of interest to bearish point of interest. And sometimes if I'm going up, sometimes I might take out a bearish point of interest and keep going higher. until I get to the next one, you know, and then I'm gonna get to the next one until I get to the one that I decide that, okay, finally, this is the one I'm gonna react off of, you know, and that's gonna come from a higher time frame.
Another quick question on that. So those wicks that came up, those two wicks to the left of that blue candle that came up, they came up and came up and tested that fair value gap, but that and that order block as well. But that's not considered a mitigation until you get that blue candle to close. Is that correct?
Mhm.
Or is the wicks or do you also consider the wicks coming up mitigating?
Nah, it's the candle that's trading.
Okay, all right, cool. I just wanted to make sure. All right, go ahead.
So at this point, all the way through this point, right? Okay, as price is going up, right? You know, if you didn't take it at this low, like, and you see price back into this, if you want to, you can take it, buy from here, you know, you can break in retest from here, but essentially you should be saying, all right, I need to be looking for sales, right? I know when it comes to the middle, I know when it comes to the high, if I can't break this high right here or this high right here, I should still be looking for sales until it comes back down to the low of the gap right here. And when it comes to the low of the gap, if it holds right there, that means it's mitigated. That means that if it holds right there, I can go back up from that point. I can go and make a higher high at that point. And that's what it did right here. There's your higher high. And then it even came back down and used it again after it made this high and after it made that high. That's a 50-50 day. That means at that point, price could kind of can do whatever it wants at that point, because I mitigated this gap and I took this high out. So if I want to, price could have went lower at this point because I would have took all of the short-term liquidity and I would need to take out some higher time frame target if I wanted to go any further or go any lower. And then you kind of just stuck in a range at that point. Just like over here, where we at now, right? We had a shift in market structure. We got this imbalance right here. And it's not a coincidence that this high right here on this candle is basically, what is this? The high on this candle is 39.04. The imbalance is, let me get it on the dot. The imbalance on this candle low is,
so basically 50% of that fair value.
30. This is 84.20. All right. So literally the high of this candle is pretty much the middle of this fair value gap right here. The opening of this candle is pretty much the middle of this fair value gap. It's not a coincidence, you know? Like it didn't just stop right here for no reason. Like it came up here and stopped because we in the middle of this imbalance. And you can even throw in the daily price right here. So you had two competing factors that just stopped it right here. So if we come back down to 84, we already know, all right, if we go up to 31.20, 39.21, we could buy it. We could look to buy it from here to 39.21. But once it gets to 39.21, I'm going to be locking in heavy profits because at that point, I already know in the back of my head, like, all right, this could be selling off from here. Maybe I'll leave a piece in and try to come and get these highs right here, possibly. But if it comes and get these highs, in the back of my head, I'm thinking, right, it's want to go to 39.74. It wants to go to 39.74 because that's the middle of the daily imbalance right around here. And you can even see on the 1 hour, it's an order block right there. It's an order block right near the daily. So if it does just keep going up, we take out this high, we come there, right? But even once it gets there, because we already know we bearish on the higher time frames, we got to say, all right, if it come here, I need to lock in some targets, lock in some profit. And I can also likely set up a sales situation from up here. If it keeps going, that means it still ain't ready to go, right? But even if it comes to here, you're gonna have a reaction. If you get in a sale from here, you're gonna have an opportunity to get in and get out and at least make some profit, you know, because overall we bearish. If it comes here, it's gonna react, it's gonna sell off at least 200 pips, 100 to 200 pips from here. It's gonna sell off from here at least 100 to 200 pips from here, because these are high time frame areas. Just like over here, when we finally came back to the low, it sold off 100 to 200 pips. Even when it came right here, it sold off 100 to 200 pips, even though it wasn't ready to actually sell off, and we still pushed up higher until we got to this point. Till we got to this point. So key things, right? And this is like, this my bread and butter setup right here is this bread and butter for me.
Hey,
If-
Corey,
Yeah.
a second ago you just said you could tell from the chart that we're looking at that was the high on the daily. How do you do that, even though you're on the hour chart?
I said that.
Yes, at least that's what I thought I heard. The kids were talking, but that's what I thought I heard.
I don't know what it was in reference to. I
Okay.
don't know.
Are you talking about when he said, you're going to get a reaction because that's the middle of the daily fair value gap? Is that what you're talking about?
Yes.
Yeah. Yeah, but Corey, because he got his fair value gap of his daily already drawn out, so he see it when he goes down to his 1 hour. That's what she's talking about, I believe.
Oh, okay.
Well, thank you for that.
You're most welcome.
Okay. My bad. So a bread and butter for me, right? And this could definitely be what y'all add, right? So bearish order block, bullish order block, imbalance, right? And I look for that up move, this imbalance, right? Come back up right here, take out the low. This is bread and butter, right? And inside of this, I'm looking for a combination of an order block and a shift in market structure somewhere near this area to take out a low. Once I get the shift in market structure, right, wherever my imbalance is, should be somewhere around here. Gap high, gap low. I'm looking for this setup. Counter that make the high, or the highest high right here. In this example, I'm looking for this. My targets are whatever made this low right here. If it goes further, I'm looking at whatever made this low right here. That's the sales setup I'm looking for. Shifting market structure with the order block and the imbalance. Looking for price to come up to it. And then after that, These the key numbers I'm looking at. If it comes to the low, middle, and the high, preferably the high to the middle, I'm taking my sell. If I'm doing this in the opposite direction, it would be the same thing, but just in the opposite direction. If I'm looking for a buy, looking for the same exact thing in the opposite direction. So it'll look like this. Order block.
Yeah.
Imbalance.
Oh, cool. That's nice.
Oops.
Yeah.
And then order block or imbalance on the higher time frame, right?
Yeah.
So in this case, it's
Yeah.
order block. I'm looking for
Yeah.
move up, engulfing to create the imbalance, right? I'm looking for somewhere along here, shift in market structure, whatever the case.
Yeah. Yeah.
To the upside. Once I get that, I know,
Right.
all right, I got order block to the upside, bullish order block over here.
Yeah. Oh, really? Okay.
I got my imbalance
Okay. Okay.
somewhere around here.
And they're not cooking. Look, they're not cooking around small. Okay.
That's
There's no
my low.
stores in it.
I'm gonna mute you, Khalil. This is my high somewhere around here. Then I'm noting these levels in between. And then once I do that, you got something like this. Return to come back to here. That's what you're looking at. And then, you know, your trade setup on this can look something like this. Worst case, best case. This is the low. We trade. Look for the entry. We have, this is our main overall stop loss, right? If just everything go wrong, this is worst case. But usually the counter that make it, that can be your stop loss. And then you trade to at least above the high. And you can just look at that for the opposite direction for the buy setup. And yeah, it's okay for the buy setup. I want to see that shift in market structure with order block and a gap imbalance included. And once you see that, you will get a high probability setup. Then you can see the same thing on like everything I just showed you. You'll see that on NAS, SPX, and US 30. So let me send you this chart. Huh? Huh?
You know, it's us, your setup, what you just did on the chart, you show that to us, like the actual candles.
Yeah, I'll drop it in there. This. Okay. And then NAS. Let's go to the 4-hour chart. Just the daily. And then here, NAS look a little different because we can also come into this. We got this imbalance right here. That's the daily order blocking imbalance. And then on the 4-hour, we got this level right here. Right here. And is this confusing to everybody, or is this like making sense? Is this confusing, you guys?
Well, you know, it makes sense to me.
But he needs to lay on that wood, because that wood keeps him cool.
So everybody confused?
No, not me. I'm good.
Okay. How about the rest of you guys that haven't answered? Is this confusing you guys, or it's just like, what about you, Christine? I know you got this, right? Miss Tate, Marcus, Marceline, Yu, Beta, Nathaniel, Fabian, Lex.
Hello?
Yep,
Oh, you can hear me?
yep.
Oh, I was saying, can you show that on like the 15 minutes, what you just drew up? Like, how does that look on the charts?
Sure.
Thank you.
Sure thing. Sure thing. Let me just get this. One last thing on NAS right quick. So this is what my buy and sell will look like for NAS. If we came back here now, on NAS for the buy, if it came in, I would start looking for it once it came back, but this is just worst case. I'll just leave it like this, but this is worst case. But once we get it around, if we come back in the 11 or 800 area and we hold inside of here, then I will look to buy it. And I'll be looking to at least buy it to around the middle of the daily gap and this 4-hour gap right here. So then once we got there, I would possibly be looking for a sale. So that's what that's going to look like for me going into next week initially. So I'm going to drop this right here too. So that's US 30, that's an SPX. No, not US 30. Here's US 30. It's pretty much similar. Let me drop this divergence note to can one of you guys send me these charts after we get done? Because I'm not saving them. So the main sale I'll be looking
Okay.
for on this week is from here, from this area. That's the main sale I'll be looking for. And something like this. And then the buy short term, if we continue up, I'll be looking at same thing. Here's my imbalance right here. If we hold this area, there's a high, there's a low, just like we had before. Come to the middle, at least the middle. If we keep going, I'm gonna target the high, but I'll just say the middle for now. And the levels we're gonna look at are these levels right here. And then this is what it's gonna look like for those two on US 30. Beans. All right, now I'm gonna do dollar right quick, just to dollar not gonna take long. And G and EU, they correlate to the opposite direction. Trading GU. So same thing with GU. It pretty much played out. GU and EU pretty much played out. We went up to this area. This area held, right? So we didn't get that down move like I thought. We got a slight push down from here, but we kind of blew through that. Over here on GU. We did get the reaction that I thought, but we held. So we balanced this out. So we can actually go higher on GU on this, probably to the monthly. And then ZAR pretty much played out. ZAR sold off pretty much where we thought it would, pretty much right around this order block from where we were last week. And now if dollar is gonna move up, then we could probably see this push up from here. This is our order block that I thought we would trade to right here. Just like over here on UCAD, same thing. We sold off from where I thought we would. And then we stopped at this order block. And last week, it's pretty much still holding suit, right? Either we hold here at this order block and we go up from here, or we trade down to this imbalance / order block / yearly right here. And that'll all be dependent on if dollar keeps falling. Because if dollar keeps falling, then this will keep falling, just like ZAR keep falling. And if ZAR keeps falling and we trade below this order block, we got an imbalance right here that we could go to. And yeah, that looks like the most recent thing, this imbalance right here. Then GU and EU, both of them reached the order block here. And it's order block right here on EU. So both of them are at order blocks to the downside, bearish order block. And if it does sell off on EU, we got an imbalance, a bullish imbalance right here, and an order block right here. We trade to that. If this sells off on GU, let's see what we got on the 4 hour. We got a low, an order block, and an imbalance. So we might go into a range, and that's what it looked like on dollar. So I would probably look for this to either keep pushing up to like the monthly and maybe keep pushing back up into this little point of control area right here on EU. But this looks like it's gonna kind of range. So I'm not really gonna touch those too much, GU and EU. But if I see anything on this, I'll drop it in the chat. But like I think it's just gonna range a little bit, especially until we get Powell speaking. So, and then finally, you mentioned that you wanted to see the same thing on the 15-minute. So we go to the 15-minute, right? And we look at everything that I just mentioned, right? Okay. Equal lows right here. All these equal lows. Let's do a replay. Let's go replay right from here, right? And we looking at this on the 15-minute, right? We got equal lows here. We already got a small order block right here and a larger one right here and a larger one right here. So you can note this one right here. One right here. And we'll just note these two. But what about these? These two don't stand out to me on the 15-minute. And I'm gonna tell you why. Because where's it's an order block right here and right here, but where is the engulfing shift? Where's the market shift? It's not one, right? This looks better right here because this got engulfing, right? But here and here, they don't have it, right? So these don't really stand out. So for me, all right, I'm gonna watch this area. If I think this is gonna sell, maybe I'll take a sell right here. But I don't have the shift in market structure. When do we get a shift in market structure? Right here. You see this? This shift right here. These are highs right here on the 15-minute. This is where you get your engulfing right here. So now you can say, all right, cool. Imbalance right here. That's the low. We don't have the high yet because that ain't done. So let's see what happened. All right, now we confirm the high. That's right here. Then now that we confirm the high, we already know. 1, 2, 3. We can key in right here because this already is by the daily. But worst case, you take it from the high, middle, or the low. Your long position, the worst case is here. To here, at worst case, right? Your goal on this trade is to take out this high right here, this little high right here. That would be the goal for this. Now, if it comes to the high or to the middle and you want to take it, you get confirmation, that's cool too, because that'll work out as well. But we looking, we waiting, 15 minutes. We hit the middle. This way, and I'm glad this happened, right? This is a case where it didn't work, right? Because we got what we wanted to see, right? Shifting market structure, engulfing. But what are we overall? We still bearish, right? So for us to take this trade as a buy, right? I'm not going to be looking for 15-minute shift in market structure, because 15-minute shift in market structure doesn't say that this is actually ready to go up. This just says, right, it's probably going to another higher time frame point of interest, right? So this is a good example right here, like when it doesn't work. If you had took it from the middle, you would have had a chance to, if you had taken it from the middle, right? Had taken it from the middle, you would have had a chance to make like 100 pips off of this. Not even 100 pips, right? That's okay. So in this case, it would have failed, and that's good to see that, because in this case, we got our shift in market structure, we got our imbalance, and we pushed up until we got to this order block right here, over here, and we failed. But remember, I told you, we go from one point of interest that's bearish or bullish to the opposite. And in this case, we would have came to from these lows that we just made right here, which are now bullish points of interest, to this bearish point of interest, and we sell off from there, right? So we technically should have been looking for something that would have been selling, because we got here, this is already a bearish point of interest right here, even on a higher time frame. We come back over here, we coming up near this imbalance. So we shouldn't have even, we wouldn't even really been looking for a buy right there, honestly. And if we do buy, we already know we coming up to danger points, right? If we go back down again to the lower time frame, maybe you wanted to take this buy right here, or maybe you would have been looking to say that we come, once we get down to this area, if you wanted to try to buy from here. Let's keep going on a replay. All right, here's another shift right here on the lower time frame. I don't know where we are on the daily, but this is a shift though, right? On the lower time frame, we got a small imbalance. I don't know how this is going to play out, because again, we went from this low, this shift in market structure, this order block. Let's see. Us buying from here is saying that we are trading against it. So, all right, here, right here, if we had to took this buy going against it, here's our order block combination and balance right here. Our trade would have been likely around this area right here. That's the low. It would have been right here. To right here. Where the middle, low and high would have been at these prices right here. So it looks like we would have been able to get into this trade at the middle, low, or the high. And we would have been able to target this high. And we would have got it over here. But again, we trading against trend, right? So that already put us at a disadvantage, right? But we already got this set up. But in the opposite direction, here is what we could have been looking for a sale. Here is the gap right here. That's the high. This the low. The levels you consider right here. And then you know we got a gap right here. If we scroll over to the left, these lows, that's our shift in market structure, right? Let's pull this out right here. That's our shift in market structure on the lower time frame, right? And now we already done we would be done with this buy because we would have hit our target on this. And now if we looking for the sell, we like, okay, worst case, we get into this at the middle, low, or the high. Let's say we get in at the middle. We can use this as our stop loss right here, or this candle right here, because this is the one that made it right here. That made our high. So we'll use the candle that made our high as the stop loss, or we can use the engulfing candle high. So far, we would have been okay with using this high as our stop loss. We would have gotten this trade and we would have been looking to target this low right here. And that would have been our primary target. We could have took out as anywhere in this case, right? We would have been able to take out of this trade for pretty much the whole trade right here. We would have missed it probably. Let's see how far this missed it. By 15 pips. We missed that by 15 pips almost. But we pretty much hit our target on this with minimal drawdown. We didn't even have to get in at the middle. We could have got in at the high and would have got more pips, or we could have stacked it, right? We could have stacked one at the high, middle, and the low and just took it all the way down. Your targets in this case would have been, if you took this trade from the high, you could have had a piece off at the low. If it kept going, you could have targeted this old low right here. That would have been your new shift in market structure. And then you would have been overall looking to take it down here. If it keeps going, then you have to come to the higher time frame to say, all right, where's the point of interest on the higher time frame? If we replay this again, let's see what ended up happening. We play this again, we probably would have got some stuff stopped out right there. Yeah, everything would have got stopped out, but we would have pretty much hit our target. Let's say we don't close out because we use this. Let's see what would happen. Yeah, this would have just eventually stopped us out. But we would have had more than enough opportunity once we were down here 1, 2, 3 times to maximize this trade before it came back up. And pretty much we would have hit all our target. Okay. And I think that's pretty much it, man. Like, I don't know what else. I think we've been on for like an hour and 45 minutes anyway. So,
Corey,
huh?
question. So when you say the shift in market that you would confirm, would it be the 1 hour?
I mean, you can start using, you can use all the time frames to find that shift in market structure. It just needs to be a combination: order block, low or equal lows taken out, and an engulfing candle that takes these lows out. So
No, but I mean, you said something. I want to go with the 15. You were for the buys. You were saying you would have rather see it on the higher time frame, not the 15.
Yeah,
you know that buy that.
Yeah, because we are, for us to buy in the market right now is going against overall, right? We bearish, right? So for us to buy right now, you could take a buy with the lower time frame shifts in market, but I would probably take less risk on those trades because I'm essentially trading against the market. I'm counter trend. Like, it wouldn't have been nothing wrong to take this buy, even though you would have got stopped out if you didn't take some profit because we didn't come back. But over here, if we had took this buy, we would have hit our target. But at the same time, it gave us a better trade.
Friday.
Huh?
No, I said that's what happened to me Friday. I take a buy during London and it hit my target 1, but it's just turned around and went left in New York. Yeah.
That's because overall is going down. Overall, we're going down. So in a market like this, it's okay to buy because you still want to give yourself a chance to take the dip buy. Like, that's still a probability, right? You know, we don't know how low the market going to go. We don't know how, you know, what's going to be the low, you know? So you always got to at least give yourself an opportunity to get in with the low of the lows, because you might get in a trade that you can stay in for the rest of the year, you know, if we get the low. But since we trading against what's going on, you can't take as much risk on those trades because then you could get tore up because it could keep going lower. So until we get, you know, some definite signs, like some change in the sentiment, change in the market conditions, then if you buy during these times, you kind of got to take it with less risk, right? And be more aggressive to the downside instead, right?
Got it. Thank you.
So, like I said, going into the day, I gave y'all the charts. Gave y'all the charts. And, you know, I hope you guys got something out of this. Hope y'all got something out of this. Hit me up in the chats if y'all got questions or anything. And like I said, if I see something I like on gold and dollar and stuff like that, then I'll put it in there too. But right now, I think it's gonna range a little bit, so I don't know where we're gonna go from there.
Yeah, man, much appreciation. It's good session, great session, actually. Thank you.
Yeah. like I said, this setups like though these my bread and butter. These are my favorite ones. When they got the shift, the order block, and the gap. Those are my favorite ones. When they put the shift on and you got all that stuff lining up with it, you can usually take those without having that much drawdown, and you can go higher on the lots with those and have a little more confidence. Make a mistake and deleted some stuff. So
I just sent you all the links you sent us.
okay, appreciate that.
Okay.
Appreciate that. Because I'm gonna put on. Can you put them in the chat in the Discord?
Yeah, I sent them to your personal message from Discord.
Okay. Okay. All right, man. I'll see y'all this week. And yeah. Oh, if you want the link for this, you want the link for this, let me give it to you. Want the link. All right, that's the link for this. Then, yep, that's it. That's it. Oh, make sure y'all get on the guys sessions, man. I know it's in Spanish, but you know it's in Spanish, but Dave got his session. Christine got her session too, right before mine. Dave got his go live. Brian go live. Alfredo got his go live. So, make sure y'all getting on those sessions, man. Support those guys, man.
Thank you.
All right. Peace out.
Thanks again, bro. Peace. Have a good one.
Okay, bro.